And good evening to all. Myself Vaibhav. In today's session of Visual JForex, we will be going into the further details of our existing setup, which we started in the last session using the indicator Ichimoku V app. In today's part, the focus is going to be on completing the buy side of the equation. We will see how we can design and develop the logic for the execution of the buy trade in a profitable optimum way. This is the setup so far. Here, the instrument subscription was carried out where the default instrument, which is Euro USD, is being matched with the candle instrument, which in turn is being matched with the instrument of choice. The position amount, all positions were defined at 0. After that, I got these two Ichimoku VA blocks for different candle period. First one is of hourly, whereas the second one is 15 minutes. And to look at the price volatility and also to define certain conditions for the execution of the trade, we have also utilized these two get historical candle blocks of 15-minute time frame. The calculation has been done to define a price band. This is simply the variable creation with the value of 15 pips, which will be utilized in today's session. And to pinpoint the exact entry, these 10-second candles will come handy. And as has been the customary practice, we use it while defining the price point for the execution of the trade. So let us now get started. I will first give you a brief refresher of what the logic is going to be, how we will progress or proceed with defining of the conditions for the execution of the trade. First, I will explain to you what are the conditions which need to be in place for the execution of the buy trade of the Euro USD chart hourly time frame. Here I have plotted this Ichimoku VA block, indicator on the hourly candle period. The requirement is quite simple. We want the Senko A span. Here I will list these output parameters. We are relying on only two parameters, the Senko A and Senko B. We are not utilizing these other three parameters. You can define conditions in different ways, and we have these 5 output lines, and it is always a matter of choice how you want to define a setup. So this setup is going to be simple, involving only these two output lines. Now let us head back. We want this red line, which is Senko A, to be greater than the Senko B, this green line, for any buy trade to take place on the hourly candle period. And these are plotted in the future. So whatever is the current price, this will be plotted ahead of that. And we have this kind of output. So we need this to be in bullish favor. Momentum should be bullish, and Senko A should be above Senko B. And one more thing, we don't really want to get involved anywhere. Suppose if there has been quite a momentous run and we have elevated price, we don't really want to get involved. Rather than that, if the momentum is strong and some correction has happened, and now the price is closer to the Senko B, only then we want to get involved. Similar I think this kind of scenario should be an ideal one to get involved for a new trade. And for that, we are taking the help of a creation of the price band. Whatever is the current output value of the Senko B, we will add 15 pips to it, and that will create a price band within which the last tick price should be. So we will have this condition in addition to this requirement of Senko E being higher than the Senko B. Now let us see what are the requirements on the 15-minute candle frame. Here we will need the same condition to be true. We will need the Senko A to be greater than Senko B on the 15-minute candle time frame as well. And one more thing will be that we want some correction to have happened, and 15-minute candles will be used to define this. We are taking the help of last 15-minute candle and also the 15-minute candle which has closed an hour back, which we have defined using the look back period of 4. And that particular candle, the 15-minute candle which closed an hour back, should be lower compared to the output value for the Senko B. That will mean that some correction has happened in the recent past, and after that the consolidation has happened, and now the price is again ticking higher. So we are going to need then the last 15-minute candle to have closed higher compared to the Senko B output, and this is going to be the defining feature of the algorithm. So that's the simple logic, and it is going to be equally simple to execute it on the Visual JForex platform. So we have our task cut out. We have to first create a price band. For that, I will need one calculation expression block, which will be used to add this newly created variable VM to the hourly Ichimoku blocks output Senko B. So whatever is the Senko B value, we will add this variable. It has a value of 15 pips. I will show you PVM 15 multiplied by default instrument pip size. So we get 15 pips. Okay. Here we do a 1 plus a 2. Simple? Yes, it is. And that creates our desired price band. So I will name it Ichimoku price band for buy. This is for buy trade. When we will be defining the sell side, we will have to deduct these 15 pips from the Senko B. Okay. Now we will have to take the help of logical blocks, if blocks. We are going to need a couple of it, so I will add 4 or 5 of it in one go. If need arises, we will add minimum. Now, Senko A should be Senko greater than Senko B, so first input greater than second input. Okay, and then we will consider another condition revolving around the hourly candle period, which is that last tick price should be within the price band. So for that, I will take last tick ask and this newly created price band. And in this case, first input less than second input. Alright. Now let's turn our attention to the 15-minute candle time frame. Senko A should be greater than Senko B. So we want first input greater than second input. And then we compare the 15-minute candle closing values to the Senko B16. So second variable is going to be the same, Senko B16, and it will be compared to the closing values of candle 17 and candle 18 respectively. Candle 18 has a look back period of 4, that means candle 18 candle close should have been lower compared to the Senko B16. So I will take candle 18 candle close, first input less than second input, and after that candle 17 closed on the higher side. So we will have first input greater than second input. Okay. Quite simple, isn't it? And after this, we take first input greater than second input, and all that now needs to be done is defining the exact entry point, which is going to be the closing value of last 15-minute candle. Whenever price starts to rise above that, we will go for the execution of the trade. So we have to again take candle 17 candle close as the common input for both these blocks, both these if blocks, and compare it to the candle 20 and candle 21's closing values, which have the look back period of 1 and 2 respectively. So we take candle 20 candle close. Candle 20 has a look back period of 1 and candle 21 has a look back period of 2. So this should have closed higher, first input greater than second input, whereas candle 21 should have closed lower. After that, we bring in the open at market block, and in this case first input should have been less than second input, and this is going to create a new order by trade. Now let me take one more logical block, multiple action, and join it to this last calculation block and get it on the lower side. We will leave out some space. Suppose if we need arises to add additional blocks for while defining the conditions for the sell trade, which we will do in subsequent session only, as I don't think we will be able to do it in today's session. First input, sorry, this candle flow, trade flow has been joined to first block. Okay, and this in turn has been joined to trade command block. Now we have to define the parameters for this trade command block. Default instrument remains as it is. Trade amount I will change to 0.1 million. This should be kept in as per the equity of the account. Slippage is going to be 2 pips. Stop loss, since we are dealing with the lower candle time frame, I think a combination of 20 and 10 should be good enough. 20 is going to be the take profit level, whereas 10 is going to be the stop loss, getting us a risk reward ratio of 1:2. So we have these parameters defined now. Now I will color code it, make sure that iteration flow is uninterrupted. Let me check. Yes, it is. So that's it. The setup is complete. I hope you have been able to understand the logical as well as the execution part of this algorithmic setup using the indicator Ichimoku. And in subsequent session, we will be completing the sell side of the equation as well. So that's it for the day. I would also like to remind that you can check out the Dukascopy Analytics page for further coverage of the market developments. Whenever you want to start trading, the JForex platform is at your service. We are also available on the Facebook. You can reach out to us there too. Thank you all for joining in. Have a fabulous day ahead. See you next time. Till then, goodbye.